Between the Apple factory protests and the fact that they might buy Manchester United, we need to watch. Hey everybody, in today's video we're going to go through 10 stocks to watch next week. Now, stay to the end because I'm going to spend a lot of time on the S&P and what's going on, and you're really going to want to watch this. As always, subscribe to the channel, click all notifications. For those that have been here for a while, you notice we're using a new charting software. There's some functionality on here that I'm going to need for what I want to go over. So let's just jump right into it. So we need to watch what's going to happen here with Apple. Now, we all know of the longer trend up here, but you're starting to form this little wedge in here, and we're not really able to break below it. I kind of like this and how we're forming this little triangle in here. Now, between China protests and the fact that they may buy Manchester United, this held in there. So let's see how we form that wedge. Now, the longer term play obviously is right here, and this is what we're watching. But this could have gotten a lot worse today, and frankly, it didn't. So let's watch how we form in this, what I used to refer to as a kill zone, and we can kind of go from there. But I would not rule this out, especially if the indexes, which we'll get to at the end, if they break out the way they think they're going to, then this has a lot of potential. And I would not rule it out. You would think buying a $7 billion sports franchise and the way these protests erupted would have caused greater pain, and it just didn't do that. Manchester United apparently put themselves up for sale, and there's speculation anywhere between $5 to $7 billion. Most expensive sale in history of any sports team. And you can see that this has been out for some time and how we're acting on it. Obviously, this is all conjecture. I would take this with a grain of salt. We do see things like this happen on Friday during Thanksgiving because it's very easy to kind of play around with. The other thing I would suggest is look at this bar at the end of the day. Usually these kinds of bars, they finish at the top where people are buying to speculate, and that's not what we're seeing. So I'd be really careful here. I would expect this to give back if something's not announced by Monday. So you can see the volume and how it's been picking up here. You can see the movement of the price and how it's been jumping. We have these gap ups over and over again. When you have this kind of movement, when it doesn't actually go through, this can be really painful. So I don't know how many people are going to hold this if this drags on for months. We're going to have to watch how this plays out, but this is definitely something that I would be more interested in being on the short side should nothing develop. If we don't see anything by Monday, Tuesday, the puts that are outstanding are relatively cheap. So it's shaping up like something may happen, but you need to keep this on your radar because that's a long way down. SI, Silvergate, this is actually on my list, and disclosure, I started a position in this. Now, I'll get to why in a moment, but before, you can just see that you start to form this little doji right here, and then you flip it, and it just started to look somewhat exhausted, but somebody always knows. So on Tuesday, we started to see the bottom being put in. You could see how you're just trending down. Then all of a sudden you start getting accumulation, which is something that we haven't had in the name for a while. And the reason being that the overhang of what's going on with FTX. But you start to see the buying, you start seeing the higher highs start coming into the name a little bit here. Again, you start pushing, start seeing those higher lows. It's really rare for us to see this when you have so much negativity out there, but here you are. And the reason for this is because somebody obviously was aware of what was going on out there. We didn't see this lift in coin. So usually a stock will move, and then we'll find out later why. The founder of EOS Developer Block 1 bought 9.3% of the company. Now, what's really interesting to me is not only did he take a position, his company took a position. So they own about 17% of this company now. Now, I don't know this guy. I don't know anything about him in the space. I would imagine that he knows more about the space than certainly I do. And when someone like that starts taking a position, you need to pay attention. First Solar continues to push. Now, if you take a look at this today, we got as high as 73 and a quarter, 173 and a quarter. And you can just see the testing of supports, pulling back, and then the retest and breakout. What I like about First Solar the most, you see how we're just cracking these levels over and over again? So now we're flipping an 11-year base. I mean, look at this base and you're still flipping and you're seeing a lot of money pour into this sector. So I do think we can probably get up to this 175 fairly quickly. We've been buying this in the trading community for some time. I do like it. And what you're seeing with it too is every single pullback is being bought. Now it's a thinner name, but you can start seeing how you start flipping the 163.57 level. Then you start pushing, come back down, retest it. And it's over and over again. And then you just start making these higher highs, right? You come back down, test it. But all these really knee-jerk reactions are leading to the same thing, just higher prices. Again, knocks you down only to trade back up. If we can get through that 175.61 level we were talking about, I really don't see anything until you get up to about that 207 if you take a look at this. So I think this has massive potential, and I think we're seeing a lot of money pour into the space. But if we just keep pushing and we get through that next resistance point right up here, I don't see any reason why we can't get up to here. Enphase Energy, ENPH, this is another one I'll definitely be watching next week. Now, we've had a pretty rough ride of it in 2022, bouncing around. I mean, you can see it pretty clearly. I'm not really going to be using moving averages a lot today. You can see that the stocks that I'm looking at are all above it. What we're looking for are the new leaders. We're not looking for the old leaders, but we're trying to figure out where money is going. And it seems to be going in solar. So kind of a wonky cup here, wonky little handle, but it's there. Now, if we can just kind of get above that and stay above it with some kind of emphatic or oomph, you have my attention. And I like this because now we've been basing all the way since about mid-July. So I would stay focused on this space. TAN, the solar ETF. Let's just take a look at this real quickly and what's going on there. So you can see this downward trend line. You can see a little flip right here, but look at this. Since we've broken out, what are we doing? We're just making higher lows, and it's happening all over the place. And I think that's really important. And so I'm constantly looking for that and where we're seeing accumulation. And you're seeing accumulation in the space. So I would continue to focus on it. SMCI, super microcomputers, you can see the breakout super clear here. If you take a look at how you held this little triangle and then broke out of it, you're a little overextended here. Does that mean that I'm not going to want to watch it? No, I want to watch it. I mean, it's been incessant because the earnings are there. And this is what happens. This is how people start buying new leaders. They start finding new leaders because when the market goes flat or starts to rise, people don't go to the old stocks. They start looking for where the growth is. What you want to see is some kind of retest. That's what we're hoping for. You come down, then bounce, and then take off. That would be a more optimal spot to buy it. That also fits in perfectly, right, with where the 5-day is. So maybe a retest of the 5-day moving average, and that could give us a better entry. We need to be careful of buying things that are overextended right now. AMC is worth watching. So here's your undercut. Right, we're going to 0, we break that 5, the whole 9 yards, and of course it doesn't do that. But then you have this little peak right here. But if you zoom in on this, there's your peak. We know wicks are what? Wicks are price rejection, right? This is where someone's selling and saying, I'll take everything you have. Test, holds, test, holds, test, holds. If you bang on a door long enough, it should open. This door did not open. Instead, what it did was flip the 5 SMA and then push. Now I've got this really wonky pattern going on, right? But this pattern, it can move. You can move off of this fairly easily. Now, you can see, and we're going to get into this pattern in a little bit here, but you can see this undercut, flip, form, and now it looks like we're going to curl and push up right off that volume. So you have volume on this move. It's not like it just came out of nowhere. I would pay attention to this. I don't know that you have to go crazy, but I would definitely pay attention to this. If you take a look at this on the weekly, this had every reason to crack here, and it didn't crack at all. Okay, it did the exact opposite of that. And I think that's really important. Like you absolutely could have broken down here after you took out the low of the previous week, and instead you just formed another doji. So do we have all the answers? No. But we do know that we have uncertainty. And when you have uncertainty, you want to pay attention to that. I'm not getting into the validity of the company, whether the stock moves. What I'm simply suggesting is that if you flip this level, 794, you might be able to see something like this. This is possible to get another one of these kinds of pushes. To think that it's simply over, I don't know. No one's going to ring a bell when it's over. And I would also take into account this bullish engulfing here on the weekly that was then executed and not negated. Most critical right now is for us to focus on the indexes. We're at a critical spot for the S&P. We can see it trying again as we're getting these higher lows. And I think it's important to just note them, that we are continuing to make some progress here. We are continuing to make a low, retest, and then go higher. It's happening over and over again. And I think that's an important distinction. There's some other things that are going on here that we need to address. This was obviously that CPI data, but you're trying to flip, and technically you're there. Now what you need to do is to confirm we need that higher high, and we just don't have that yet. So that's what we're looking for. It's the very first thing we're looking for, but we are aware that we're running into a couple key areas. Now, the blue line is the 200-day moving average, and we can see how we've responded to that in the past. Since we rolled back down in April, you can see that line right there very, very clearly, right? How we just tried to get over that, and then we're just unable to do so. Trying again here in August 16th. Now, there's some data out here that's going to show why this might actually go this time, and we will get into that. But you can see that we need to be watching this 200-day moving average, as we've had problems with it in the past. We always look for patterns, because patterns repeat themselves. It's not a guarantee, but it's something that we need to focus on. If we look at the undercut on the CPI and then the rally, you can see that this is technically a double bottom because of the undercut. The problem with this is the confirmation, at a minimum, someone is going to suggest is here. Some are going to suggest it's here. So that's a heck of a move before this, quote, double bottom is formed. But there is another pattern in here. We have this dragon pattern, and right here, there's your head. There's your leg, the hump of the dragon, your second leg, and this part is your tail. For confirmation of this pattern, you need to flip. You're not flipping. Now, we know where the 200 is, but we're not flipping yet. We're just still sitting there. So we don't have confirmation yet. Now, there are two defining factors of this particular pattern. Number one, the volume on the second leg needs to be significantly greater than the selling. So in this case, that's exactly what we have. We have the volume is significantly greater on the buying than it was in the previous selling. This marks the leg, and this gives us the first indicator. Second, and more important, there must be a positive divergence on the RSI. If we look right here, we can see the lower low, and we can see the higher low. So that is giving us our positive divergence. So now that all those parts are mapped out and all those pieces are confirmed, what now? Now we need confirmation. First thing we're going to get confirmation from is just by simply flipping this level, which we're just not able to do. And we are aware that we have to be very cognizant of this 200-day moving average. Now, we know that these are issues, and we're going to have to watch them. The confirm is flipping this, but we need to be aware that we're within 1% of this area. Based upon this particular pattern, this hump, the dragon, actually becomes your target price. So you can see this pattern pretty clearly. After you play with it a couple times, you know the criteria that you now need. So you can actually overlay this in a couple other areas, and it's actually developing in a couple other sectors that I will put together in another video. But we have our target, and we know where we're at, and we know where we stopped last time. So now we have to kind of drill into this and say, is there something else that we could find that might help us get a better picture of what's going on? The answer is yes. This is the S&P's percentage of stocks above the 50-day moving average. Right now, we are at an 88 3/4, let's call it. You can see that we were there Tuesday, August 16th before. Again, Wednesday, April 2021. Back here during the pandemic in June. So it's pretty rare for us to be up here. And essentially, this is telling you that about 90% of all stocks are above the 50-day moving average, which is pretty significant. Now, if we overlay the S&P with the percentage of stocks over the 50-day, we can see this line, and we can see clearly that it marks the high, previous, and you just kind of go through and you take a look and see if they had something similar. Well, this kind of sold off here, didn't it? We bounced back up, but nonetheless, we sold off. And you just kind of go through these points and you mark them off and you see what happened. And then you can get an understanding of, hey, this may happen again. So knowing this, we need to have our antenna up. This is the percentage of stocks above the 200-day moving average. Now, as you can see, it's at 58, significantly lower than where we were on stocks that are above the 50-day, which is interesting. But we do have one little distinction here. We made a higher high previously. So we have a data point that's a little different that's showing that the breadth of the market is actually getting wider. Now, what we'd want to do is we'd want to see if there's any kind of correlation with when we're making a higher high, if that equates to higher equity prices. So we can see the disparity here pretty clearly. You can see this peak. You can see how we're acting at that peak after here. And now you can see that the percentage of stocks is above the 200-day moving average versus this peak, and the S&P's lower. So the breadth is wider on the market, but the equity prices are lower. So that shows broad-based buying. Now, the previous indicator did show that maybe we could pull back, but that doesn't indicate that we're just going to fall off a cliff. So what we would do is then extrapolate out and look at this and say, were there any other higher highs like this over the course of time that we could look for? Well, here marks a peak, and then here marks a higher high. And if we look at it from that perspective, from the peak to the higher high, you can see how this played out, and we got higher equity prices. And then we just kind of go through this repeatedly and see if we can find similar situations. Here we are in 2018, where we make the higher high. And if you take a look from that point on, we push higher. So now we're aware of the breadth of the market, how it's widening, how we might be a little overextended. But then we take a look at the put-call equities ratio, and we can see that we were just as high as 1.55, and then you kind of extrapolate this out and go, geez, when was the last time we were this high? Well, you would have to go back to this date. Now, if you go back to this date, that's going to take you to March 2022. So that's pandemic level buying. And from that time on, you can just see the absolute collapse, and you can see roughly where we're at. Now, if you take these dates and you overlay the movement on where we were at during that period in time, and then you look at where we're at right now, and you can see that we dropped. But let's just call it here to put it in perspective. So we have the same kind of reading here on the put-call ratio that we had here. Now, it always helps to zoom out a little bit and get a sense of where we're at. So you see the put-call ratio that we're giving the same reading on is right here after this particular kind of drop. So when you take a step back and you look at this drop and you compare it with something like this, we see a drop of about 34.28% from when the pandemic started to ending the sell-off. This was the complete pandemic selling. It took about 2 months. Now, from our peak to where we are right now, from the low, we're at about 28%. So it's not as deep as it was before, but it's comparable. Take a look at where we are in regards to the 50-month moving average and look at how we continually bounce off here, 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 here. The only time we didn't was the great financial crisis. Every other major event that got us down to these levels, we've bounced off of. So I think there's enough data out here to suggest that we could continue to bounce. And the first step of this is going to be watching that dragon pattern. Any questions, as always, reach out. The trading community is on waitlist. If you are interested in joining, simply click the link here in the top right, and you'll be added to the waitlist. You'll also be signed up for the free newsletter. Trade to win.